Welcome to Marmore's podcast series. Today we discuss GCC asset management with Rajesh, who is the analyst. My name is Ram. Welcome, Rajesh.
Hello, sir.
Well, Rajesh, in the aftermath of the global financial crisis of 2008, most financial markets kind of hit. What has been the scene in the GCC region, and how has this specifically affected the asset management segment?
One of the primary outcome of the global financial crisis would be the slump in market liquidity. Lending to retail investors almost freezed in GCC, and the shallow nature of the markets over here, and the market volumes, which are usually dominated by few blue chips, further compounded the problem. In addition, if you see the industry structure, most of the funds are below $50 million in size, and the regulations keep evolving post the financial crisis, and it's not uniform across the GCC countries. So this has actually constrained the business growth of various AMCs.
You said lending at the retail sector was affected, but what has that got to do with asset management?
Over here in GCC, there is the banks usually lend to retail investors even for purchase of investment securities. It's not the case as in like any other country wherein lending you can't take out a loan for investments in securities market.
What is the menu of products that is available from asset management companies in the GCC?
For a typical GCC investor, the options provided by the asset management companies over here are not too many. Most of the asset management companies over here, they dish out the plain vanilla mutual funds and the sector mutual funds. Apart from the equity products, the fixed income space is only slowly picking up. Even among the bonds, most of the bonds are being held to maturity, and they are not actively traded. We don't have an active debt market in GCC. In the derivative space, Marcus has come out with Forza Fund, and they actively issue call options on Kuwait-based stocks. Apart from that, since most of the markets are Islamic, we don't have much of derivatives too. And if you consider other products like ETF, structured investments, and private equity, the penetration so far has been very minimal and limited.
But I thought ETFs have generally been very popular in most of the other markets, like people like to invest in the index through the exchange traded funds. Why has that not been popular here?
That's quite true. And if you see in the developed markets, ETFs are one of the strong components for any of the retail investor. But over here, if you see, the propensity for alpha making or generation of alpha is quite high since the markets are high.
It's the additional returns, is it?
Yes.
Alpha would mean the excess returns.
It's the excess return over the benchmark. Since the markets are highly inefficient over here, and there are not much of players, and since the market is characterized by high volatility, the propensity to make alpha by the managers is quite high over here, and hence retail investors, instead of benchmarking to a particular index, they would rather prefer to give their money to the asset managers for a specific sum to gain additional returns.
Would this therefore mean that the asset management companies have to do very little marketing, or is it that they still have a specific distribution and marketing strategy?
If you see the distribution and marketing strategies for asset management industry as such in GCC, it has been primarily dominated by the banks. So if you see the asset management companies which have a parent banking group, they usually used to command a lot of market share. And apart from the banking distribution model, there is not much of other avenues. The distribution mode has been based on a single focus. There are not much other avenues for distribution. Third-party distribution hasn't it picked up. Most of the AMCs which don't have a parent banking group, they have a very hard time marketing their funds. Independent advisors have picked up in UAE, where there is a sizable amount of expat population. But otherwise, we believe as the market matures and evolves, third-party distribution has a lot of scope over here.
Well, Rajesh, both Qatar and UAE markets have, I understand, been upgraded in the Morgan Stanley's MSCI emerging indices. When will Kuwait get upgraded?
Instead of the question when, I would rather answer what Kuwait needs to do to get included in the indices. MSCI usually comes out with the annual report stating the key hindrances which are affecting or the key parameters on which the country is being evaluated. If you consider the case of Kuwait, we see that the banking sector, there is a ownership limit of 49%, and this effectively restricts almost 23% of the market for foreign investor participation. Also, the market information is not disclosed on time, and there is a significant time lag. Even if you see the market regulators, most of the regulations are not available in English. They usually come out with the regulations in Arabic, and it takes quite a few time to get translated into English. The companies as such in Kuwait, their financial disclosure pattern is quite poor, and it's not up to the international standards. There is a significant delay in announcement of their earnings, as well as they don't follow the local accounting standards. The regulators need to enhance the enforcement of standardized accounting standards and make it in line with the international accounting standards.
There was one thing that I could not catch up. You said investors will not have access to 23% of Kuwait's equity market. What is that?
It's like since the ownership limit in the banking sector is restricted to 49%, and as banking sector is a huge contributor to the market capitalization of Kuwait indices, restricting this.
You mean banking sector has a 23% market cap?
Banking sector as a whole has roughly around 40 to 50% of market share. So restricting 50% of it restricts 23% of the market to the foreign players.
Just one last question. In your view, what are the things that needs to be done for Kuwait to get into the emerging market index?
One is make the market more open to foreign investors, improve their corporate governance measures. There was a proposal to introduce the corporate governance code, but then it has been delayed currently. We wish the corporate governance code is accelerated, and the company should come forward to disclosing additional information, material information on a timely basis in the exchange, so that the investors could ideally incorporate that information for their own investment purpose.
Thank you very much, Rajesh.